What's up, Brett Swarts? I am so stoked to talk to you today because I'm a big real estate investor, not a big one, but I love real estate in general. And I get to pick your brain on 1031 exchanges and anything to do with really capital gains and how you can leverage your taxable income to actually use it to make more money and shelter it, which a lot of us business owners are trying to protect our income. So for those that don't know, can you give us a little bit of background about you and who you are?
Yeah, thanks, Brent, for having me on the show. And most high net worth individuals, they struggle with capital gains tax when they go to sell commercial real estate, primary home, or a business. And so we now focus on helping people defer those taxes, and we'll get to that in a minute. But it started out with having people who are my clients get absolutely hammered when it came to selling real estate and having to use the 1031 exchange to chase properties and overpay for properties. You see, I started out in my career, I joined a company called Marcus and Millichap in 2006, helping people buy and sell multifamily property. And at the time, it was really interesting time because the marketplace was really highly appreciated. There wasn't a lot of inventory. Lots of 1031 exchanges going on, and it was kind of known as a seller's market. Okay. Right. And that was great for us as we were learning. And I was brand new to the industry. And if you don't know, in brokerage, you're sink or swim. You either make 100% commission or you don't. I was just married, just out of college, and it was just starting to get going in my career. But it wasn't always easy. You see, when you're facing with folks who've been in the industry for 20 years, 15 years, 5 years, 10 years, they're ahead of you. So you're kind of like the apprentice, just learning about the industry. So I started to get some momentum and I started to learn, but I was literally making like zero to like just $20,000, $30,000. Wasn't always easy, right? Very challenging. Getting my feet underneath me, but then the market completely crashed, right? In 2008, it was like a brick wall. Right. And not only did my barely survive business kind of go to zero, but then I saw a lot of my clients either lose half of their wealth or some lost everything as the bank started to foreclose on some of these properties. And we tried to identify what happened and why. And what we found was a lot of people had overpaid via the 1031. They had taken on too much debt. They had sold high, Brandon, and bought higher 180 days later with equal or greater debt or even more debt. And that became really a nightmare for a lot of folks. And so we said, there's got to be a better way. And so we started to look around, and also personally, I started to look around like, how am I going to make it in this business? And so I did what every good, entrepreneur, business person does who has a dream and loves what they're doing. I went and got a side job. So I got a side job working at a place called Cheesecake Factory, where I served cheesecake. And I had studied in college 2 degrees and a minor, had been really successful in sports. I was able to play basketball on scholarship. So I was used to have a really high success rate, but it was not easy. I mean, I don't know if you've ever been so scared, Brandon, where you're not sure how you're going to feed your family, or if you're going to have to move in with your brother with your kid into their small condo. Well, that's where I was at. I was really scared, really just trying to make it in the business. So I did the side job on the weekends and nights. And so by day, I'd be making calls at Marcus and Millichap, trying to help people, keep their properties versus the banks or lower their overall income, try to get more income by getting more renters or renegotiate their taxes. And by day or by night, I'd be selling, cheesecake, right, to keep the bills from piling too far up. But just at the right time, my manager brought in a gentleman to speak on what's called the deferred sales trust. And it was a moment which changed everything for me. And basically what he went on to say was, look, the old way of doing things is like the 1031. It's like Blockbuster, right? Yeah. And we can get into that more in a minute. And the new way is like Netflix. And had they done it like Netflix, they could have gotten rid of other debt. They could have not have overpaid, and they could have diversified and been liquid with the capital. And so the plan was, okay, oh my gosh, this is amazing, but people don't know about it. So I started to educate my clients. I started to give referrals to my business partner now. And as we grew, my business grew. And as I learned more and added more value, my business grew. And fast forward now, I'm still in commercial real estate, but I also have a company, and it's Capital Gains Tax Solutions, where we educate brokers, syndicators, operators, and high net worth individuals so they never have to feel trapped by capital gains tax ever again.
I think that's so amazing. And I love the analogy with Blockbuster and Netflix, because that's huge. I mean, Blockbuster is obviously out of business, or they may have like one or two stores around, but obviously Netflix is blowing up. And just like you said, like the old way of doing things was a 1031, and this new way of doing something is the deferred shelter
Deferred sales trust.
Trust. So I think that is so amazing. And I'm actually at the point right now where I'm thinking of selling my properties. And I actually have a few questions. So for those that don't know, actually, what is a 1031 exchange for people that aren't in real estate or maybe just starting real estate?
Sure. So a 1031 exchange is just a tax deferral mechanism. If you sell investment real estate and you buy or trade it for like-kind investment real estate, you can defer the tax. So let's imagine. We just closed a deal in Sacramento. It was $270,000 per unit. It was a multifamily property, and they sold it for about 1.9 million. And they were looking to trade into 21 units in order to defer the tax. You see, they had bought it around 800,000. They had about a 1.1 million dollar gain. And so what the government does is they say, look, that's great that you made all that money, but if you sell and just cash out, they're going to take what's called a capital gains tax, which is somewhere between 30 and 50% based upon the depreciation recapture and what kind of property you own and how long you've owned it for and what you bought it for and how much depreciation you've taken. So it's a mathematical equation, but essentially, do you want to pay hundreds of thousands of dollars or millions of dollars if it's a big enough deal, or do you want to defer it and move it and trade it to another property? And when you do it in that order, you're able to defer the tax and keep the money working for you. Now, some very, very, very strict rules. You need to identify a property or properties within 45 days of when your first property sells, and you need to close on a property or properties within 180 days. And we call this the forced marriage. It's like the shotgun wedding. You have any friends, Brandon, who got the shotgun wedding? Where they meet somebody and they're like, hey, I'm all in, we're going, right? Well, that's oftentimes what the 1031 is. This is why it's like Blockbuster, right?
Yep.
You have to make these quick decisions typically, and oftentimes you're trading in the same market. So you're selling high and then you're buying higher 180 days later, which our parents taught us to sell high and buy low, right? And so that's the idea. In fact, one of the most prolific deal stories was in 2006. A gentleman used the deferred sales trust for the first time. You see, he was selling his highly appreciated property. He had all of this gain, and he's looking around for these 1031 deals, and he can't find anything. It's just crazy price, kind of like what we're in right now.
Right.
And he goes, all right, for the first time, he used the deferred sales trust. So he sold, and he got on the sidelines. And this is why it's like Netflix. You see, you don't have to go into equal or greater value property within 180 days. You don't have to take on any debt if you don't want to. In fact, you can diversify your wealth. You can put it in stocks, bonds, mutual funds. You can put it in the bank, and you can sit on the sidelines, all tax deferred. And that's exactly what he did. So he sold it in 06, waited 5 years. And guess what? The property that he had sold to that person who had overpaid for it in his mind was foreclosed on. He couldn't hold on to it. So guess who the bank called? The bank called him. And so they said, hey, you sold that property 5 years ago. He goes, yep. And he goes, well, we just foreclosed on it. We're curious. Would you like to buy it back? He says, well, maybe. What's the price? They said, we'll sell it to you for 60 cents on the dollar, or 40% less than what you sold it for. And he said, sure, I'll buy it for that. So he had sold high and then he had bought low, not using a 1031 through his deferred sales trust. And here's the key. All capital gains tax deferred. You see, most people believe you have to sell high, pay all the tax, and then wait around, where you don't anymore. It's Netflix, right? You don't have to show up on a Friday just to have your movie checked out, or just to get it and then have to return it within 3 days and then have to rewind it. No. You can actually sit at home now and just click, Brandon, and it's seamless. It's never checked out. Now, there's some ongoing monthly fees, right, which you have to pay. This is part of our service. It's not just like setting up an LLC. I'm a trustee, and that's our role. But we coach you through the whole transaction, and help really create what we call a transformational wealth plan or transformational exit plan. Because a lot of our parents, guess what, Brandon? They're baby boomers, and they want to retire from the toilets, the trash, the liability. You see, they've made their wealth over the last 20, 30, 40 years, and they're part of according to the American Bankers Association, the largest wealth transfer in the history of the planet. In fact, there's about 77 million baby boomers in the U.S. alone, and about 10,000 are turning 65 every single day. And they have $17 to $20 trillion of wealth that's tied to primary homes, real estate, and businesses that they're looking to sell and retire from all of the toilets, trash, liability, new eviction laws, rent control laws, especially in California. It's kind of a mess. But they don't know how to get out without paying all that tax, right? So they're kind of stuck between a rock and a hard place. And guess what? A lot of them don't want to trade, 18 units for 36 units. I just did a deal with Peter. He sold 18 units in Sacramento. He's a baby boomer. And he goes, Brett, I have 18 problems. Why do I want a 1031 and have 36 problems, right? He goes, so he used the deferred sales trust. He's now tax deferred, out of debt, on the sidelines, spending more time with his family, right? He doesn't need any more wealth. He just wants to preserve it, and create some along the way.
Right.
So I'll pause there. I said a whole lot, but that's exactly what we're doing here with Capital Gains Tax Solutions.
That is amazing. I mean, I know a guy who actually just sold a smaller unit building for a 200 unit building in Texas. And they were audited because of the whole 1031 and how that worked out. So I would feel like this trust setup is much more safer in a IRS standpoint. It seems like it's a way to protect your wealth instead of having more problems. Is that kind of how you feel about it, or is it just a?
Let's walk through the legality, right? Because that's the number one question you want to ask whenever you hear about a new tax referral strategy that maybe your CPA or your realtor didn't tell you about. And so let's walk through what it is. It's based upon IRC 453, which is known as an installment sale. It goes back to the 1920s and 30s when the law was passed, and it's known as a seller carryback. And actually, Brandon, you actually know it, and your realtor and CPA knows it as carrying paper, right? So let's just say you're selling $1 million property, and I came to you and said, "Hey, Brandon, I want to buy your property for $1 million, but you own it free and clear. I either can't get financing or don't want to get financing. Would you carry paper? Can I give you a $500,000 down payment? Would you carry, the other $500,000?" And you say, "Sure, Brett. I don't necessarily want to pay tax on the full $1 million, right? I'll pay tax on the first $500, but the second $500 I'll carry back." And that's known as a seller carryback. Mm-hmm. Very common, very known. The only difference here is we're going to insert the trust, and we're going to say, "Hey, Brandon, tell you what. Find that $1 million buyer. He's out there. He's ready to go. Have him bring all the cash to you. But instead of doing a direct sale to him and taking all $1 million in one single day, let's do a specialized installment sale with the trust. So the trust is going to become the third party. It's going to buy your position for $1 million. It's going to ask you to take a zero down payment, right? So you're going to receive zero, and you're going to carry back $1 million of paper, right? Of a note, promissory note. And it's going to immediately turn around and sell it to that buyer. Now watch this. If the trust bought it for $1 million, Brandon, and sold it for $1 million, how much gain does the trust have?
Zero.
You got it. Now, Brandon, if you received a zero down payment and you carried back 100% financing, how much tax is triggered today?
Zero.
You got it. And that's exactly what happens. We sell the property to the buyer. He's gone. He's happy. And now your money is sitting. We use TD Ameritrade. They just connect with Charles Schwab, 24/7 access to see the funds. Funds only move with your signature. But essentially, you can set up a payment stream to receive cash if and when you need it and pay tax slowly along the way, and or just live off the interest payments. Okay, and just pay tax slowly along the way, and that's really the whole idea there. Now, as far as the IRS, they've seen it. They've done 15 audits. 12 of them were random audits for clients. The largest deal was a $125 million deal. No change audits, not one single issue over 25 years. Thousands of closes now, billions under management. We actually just have more than all of that track record. We actually just had 4 former PIMCO guys who are now a part of the advisory team for the Deferred Sales Trust. And these guys helped take PIMCO from, I think, about 90 billion to 1.2 trillion. Then they all retired. And then they were looking around, and they actually, connected with my business partner, and my business partner connected with them. And basically they oversee and they advise us. But they did the due diligence on this, and they looked at it to say, is this legit? Is it work? Is it legal? So as far as the 1031 is absolutely legal too, by the way, not to say that that's not. It's very legal, right? And it works as long as you follow those guidelines. But we have a very low audit risk. We also have what's called a private letter ruling. And more than all of that, the tax attorneys stand behind the work. They provide what's called audit defense, okay, for the life of the trust. And so you're protected on all those fronts. So hopefully that answers the legal question.
No, definitely. That's so amazing. There's so many benefits. I've never even heard of this. And I think that a lot of people just need to really dig deep and maybe try and learn, another way to invest their money. And I mean, this seems like you said, you don't have to worry about all the toilets. You don't have to get a phone call at 3 a.m. saying, "Hey, my toilet's backed up. What do I do?" Well, obviously you get a plunger, but this is a great way to eliminate all those headaches. I'm all about not scheduling, but managing headache factor. If you're able to cut out headache factor, it just makes your investment so much better for me anyways, because I don't like having to always worry about some kind of liability like a foreclosure, the housing market crashing. We're going through COVID right now, so that's an issue. And all these things kind of add up, and they put more stresses on the body, and it's just a whole recipe for disaster. So I think that is so cool that you have this this new tax kind of benefit that people can actually leverage and grow their wealth. I think that's phenomenal. I actually want to look more into this, definitely. So for someone who's, still in the blockbuster method, this is more like my own personal, I guess, question is, say, for instance, I have 10 rental units and I want to upgrade to, 30 units. Can I sell them all at once and put it into one property, or how does that actually work in regards to doing a 1031?
Yeah, great question. So one of the biggest challenges of the 1031 is the whole entity must move, and then you have those 45 days to 180 days to close. So if you have 10 separate individual, let's say single family homes that you've built up over the years, what we found before people find us is most of them just don't sell because it's too complicated and they don't want to do these small individual 1031s. And what they end up doing is either selling it in bulk to an investor at a 25 to 30% discount because it's an investor, versus selling it to primary homeowners who can get FHA financing or VA financing or low down payments and pay that extra 20 to 30%. And so what happens is either they don't sell, or B, they do sell at a discount and then they try to do a bulk 1031, which is kind of a mess. So the intent is to get the highest possible price for every home. And the intent is to compile all the money so that you can have one big down payment for a property. And that's where the deferred sales trust is beautiful, right? Because you can slowly sell each individual property, roll just the proceeds, the net proceeds, into one single trust, and you can sell those properties slowly. Take your time to market them to get the highest and best price for each of them for individual buyers, and now you can pile all the money here. Now, once the money is here, now you can take that and go use it for a down payment, all tax deferred, by the way, for a brand new property with a brand new depreciation schedule. And I'll give you a story right now. It's actually a deal we just closed for a client. It's a $20 million sale, and he's a multifamily owner in Nevada. And what he found was he had all these partners and he was doing these syndications. And the biggest thing with syndications is typically the whole entity must move. So they're not typically doing 1031s. They just compile the money. Everyone makes a big profit. Then they all pay their tax. Well, for him, he took his portion and he moved it to the deferred sales trust. So the rest of those folks paid their tax, but he put it in his own deferred sales trust. And guess what? He's selling 4 other properties right now. One's 16 million, I think one's 12, and a couple, he has these small chunks in every single one of these properties, and he's just slowly compiling into this one trust versus paying hundreds of thousands to millions of dollars of tax. And now he has one big chunk, which he can use to put it for a big down payment. So it's called a seamless partnership separation advantage, and not having to have the whole entity move advantage. So those are the things that the deferred sales trust is why it's like the Netflix versus the Blockbuster.
That is so amazing. That's wow. What can I say, for instance, I know it has to be like properties in a 1031. Say, for instance, I sell all my properties. Am I able to just buy my house or put it into stocks? I think you already answered this, but I can switch to a different kind of entity in a sense, can I?
Yeah. So the power of the deferred sales trust is what's called diversification. Okay. And so in traditional commercial real estate, you're typically trading one single asset, like 10 units, and you're moving it into 20 units, probably in the same town, same asset class. Right. And you might be more diversified because you have 20 units versus 10, but you're still like, something could happen into that town or the economy. So we like to say is, put it into multiple asset classes, and that includes stocks, bonds, mutual funds. So the deferred sales trust does not have to be like kind, because we're not doing a 1031. By the way, this is not to be confused with the Delaware statutory trust, which is just another form of a 1031. But yeah, you can literally put it into hard money lending. We had a client who we actually saved his failed 1031. His name is Dave. He sold a $7.6 million property in Georgia, and he deferred $1.1 million in tax, saved his failed 1031, paid off all of his debt, and he diversified. What did he do? Well, some of it's in the bank, some of it's going to go into the stock market, some of it went into hard money lending, and then some of it also went into a multifamily fund with multiple operators, right? It's also another thing to diversify and move it into like maybe like a TIC, but do you maybe want to go into different geographical locations within commercial real estate? Do you want to go maybe with some mobile home parks, some senior housing, some multifamily, and within different geographical locations within the United States? So that is the beauty of the deferred sales trust. You can diversify. Now, you can't put it into a primary home. Okay, why? Because the government says that's personal use. Like if you want to go buy a fancy car or use it for a primary home, you can just cash out of that amount and pay your tax and then go buy your primary home. That's no problem. But you can't invest it and stay tax deferred by going into a primary home. That's not allowed. It's the same reason you can't 1031 into a primary home, if that makes sense.
Yep. No, definitely. I think that's it kind of like goes back where you said it's investments. It's I mean, some people say your house is a investment, but it's more of a forced savings account. But I love that you're able to diversify. And if you're able to diversify, it just reduces your risk, and it's just a good way to kind of just leverage other markets. When some markets go down, others go up, and it allows you to kind of keep that your net worth continuously raising. And it, like we were talking about earlier, just diversifies your risk, and it helps you just overcome a lot of issues that do come up in the marketplace. So
you got it. We call that optimal timing, by the way. So you get diversification, you get liquidity, and then you get the ability not only to preserve your wealth by deferring the tax, but create more wealth by purchasing real estate at a discount at optimal timing, right? And that could be 12 months, that could be 24 months, that could be just when you find the deal. But when you relieve that pressure of the blockbuster, you have to return the video in 3 days, you have to do a 1031 at 180.
Right.
When you relieve all that, like you can watch videos whenever you want. You can buy deals whenever you want, right? And you can buy smaller deals. Like you might sell a $3 million property, for example, and find the perfect $1.5 million deal, but you pass up on it because you ran out of time, or you needed to buy something that was equal or greater value, right? Not so with the deferred sales trust. You could literally park it and be like, oh, yeah, it's $3 million there. Let me go buy that thing all cash. Let me put a down payment on that, and let me keep the other money just sitting my powder dry, right, until I find that next deal. And that's the idea. We want to break the chains, break you out of capital gains tax jail. By the way, this works for primary homes. We just did an $8.3 million deal in Palo Alto. It works for businesses. We just did a $2.6 million deal in Alabama. Okay, it works for cryptocurrency. It works for public stock, private stock. Okay. The 1031, by the way, only works for investment real estate.
Right.
Okay. So this is whole other part of wealth that people are selling and paying tax on when they don't have to. They feel trapped, but the deferred sales trust is an amazing transformational exit plan solution.
Yeah, and a lot of people, like, say for instance, flippers, when people get into or even stocks, a lot of them pay short-term capital gains tax because they only hold the property for so long, and they do have to pay capital gains. So this is a great exit strategy for those who are trying to maybe get out of flipping or get out of cryptocurrency, for instance, and they want to leverage a trust like you guys offer. I think that's such an amazing strategy. And the great thing about it is there are so many exit strategies, and then actually getting into a different industry by using this trust. And it's pretty amazing. I think that the more exit strategies that you can have, and the more ways you can actually leverage your money, the better you're going to diversify, like you were saying. So what is the disadvantages? I mean, why would someone take this over, say, just a regular 1031, or why wouldn't they?
Great question. Yeah. So the first thing to understand is the deal needs to be big enough, right? Okay. So we need to have basically $1 million net proceeds. Okay. And at least $500,000 or so in actual gain. Okay. So let's walk through that. You're selling a $300,000 rental and you have $100,000 gain. Too small. Right. But you tell me, Brett, I have 3 of those, and one's worth 350, and then 300, and now I'm at $1,050,000, and then my gain on 3 of those is over 500. Yes, okay, so you can sell slowly and move it in, right? But if you just have like a one-off deal, that's 450,000, and you're deferring 50,000 in tax, like, it's too small for us. It needs to be big enough to make sense. Why? Because there's fees that we need to have the actual corpus, the main principal balance, be able to pay for the ongoing fees, which is probably the biggest thing that people look at. They go, oh no, ongoing fees. Okay, yes, so there are ongoing fees, just like Netflix is an ongoing thing. However, we want to show you how to make that an investment, not an expense, by getting a brand new depreciation schedule, obviously, hopefully buying at a discount, right? And also lowering your net income by deciding when and if you receive income. And so those are some of the things we can dive into more, and they can go to capitalgainstaxsolutions.com to learn more about. But the fees are typically the biggest thing, because if you do a 1031, it's like, $750, and you just pay that to the QI company and you go buy another deal. Although, keep in mind, when you're buying property, hopefully you didn't overpay, but if you can find a good deal, I still do 1031 exchanges with clients. I'm a multifamily broker here in Sacramento. And so I'm not against the 1031. I've done 1031s. I've done Delaware's. Of course, I've done deferred sales trust. I just think clients are best suited when they have options and they can do it based upon their actual wealth plan and their needs, right? So just determine what is best for you. And for some people, it is buying that next deal. And it is, if it's a value add deal where you can raise the rents, right? You can make a good return, by all means, go for it, right? Those would be the reasons you stick with the 1031. I think the last one just is, oftentimes people are they're comfortable in what they know, right?
Right.
And they just don't know this new thing. It sounds too good to be true. Their CPA hasn't heard about it. Some people have a hard time getting over that their CPA didn't tell them about it. The counter to that is you go to your general practitioner, Brandon, who's taking, he's giving you the flu shot, he's doing some general stuff, and you've been healthy for 20 years. Like the blockbuster has worked for you, right? But then all of a sudden you need like ACL surgery, right? Well, your practitioner is probably not going to do that surgery, right? And so this is the part where we say, hey, look, you got to break free from thinking that the general practitioner is all things for all purposes, and you need to go to the brain surgeons here for the deferred sales trust. Which, by the way, I'm not the brain surgeon. I'm kind of like the nurse. I'm the trustee. I check you in for surgery, and then the surgery's done. All that being said, we have thousands of business professionals now that have joined us: financial advisors, business brokers, CPAs, national law firms. It's been vetted and looked at by so many groups. And again, the IRS, all of the audits. So once you understand that, and hopefully you've been early with us, we need to close this or set this up before close of escrow, right? Because if it's too late, meaning the buyers removed all contingencies, then we can't help you. However, if you're in a 1031, we can save a failed 1031. So there's some caveats there, but the key is to plan and get with us early so we can really help you lay out your options and find out what's the best fit for you.
And then that just goes with any tax advice, right? You need to plan ahead. You need to make sure that you're able to plan and have a financial plan so that you're able to, like you said, plan for the future so you're not screwed down the road. You want to make sure that you're following all the guidelines and everything's in place before you even pull the trigger. And so I think that, and to go back to what you said, you were saying there's all these fees, but I mean, those are write-offs, right? Those are tax write-offs for the business. So they can essentially write that off because of as a business expense, kind of like how I'm able to write off my interest, right, on my my investments.
Yeah. So two things on the fee. So if you do a 1031, buy a property, remember you're paying a commission to that seller.
Right.
The seller's paying the commission, but the buyers are really paying it because they're buying the property, and that could be 5 to 6%. What is the deferred sales trust? Well, there's a one-time setup fee about 1.5%. If it's a much larger deal, it goes a little bit lower, but 1.5%. So on $1 million deal, it'd be 15 grand to set it up. Now, ongoing, it's about 1.5%, unless it's a bigger deal, then you get a little bit of a break. And so if you look at it like that, you go, yeah. And then it helped me save. I didn't overpay for property. I didn't go into massive debt. I had liquidity. I was able to buy at a discount when the market came up. I was able to diversify. Or for some clients, they're like, oh my gosh, like I don't have to go into toilets, trash, and liability ever again. And then I can access this cash like tomorrow and just pay the tax if I wanted to. Like those are the transformational things that we provide with the deferred sales trust. So value versus cost, right? You got to look at two, and obviously you want to get away from just looking at the trees. Look at the entire forest.
Exactly.
And once you actually talk with our clients who've done these deals, once you hear the transformational stories, and once you kind of like map out, again, a lot of our clients are baby boomers, right? And a lot of them are looking to preserve, looking to get out of debt, and looking for a way to buy when the properties are at a discount, but not have to be just beholden to their deals because of the capital gains tax.
And this is not only for baby boomers. I mean, the people that want to, look for right now, like a lot of people are thinking it's the top of the market and they want to get out of their trash and their headaches. So if you do have high value property and you're looking to get out, this is a great opportunity to message Brett, make sure that you're protected and that you're able to really get in and protect your income and your net worth so that you can diversify your income and make sure you're protected on all levels. So
you got it. I'll share one deal story on that. So gentleman, he's in his 40s, he's young, and he sold a business for $2.6 million and he deferred about $600,000 of tax. And he wanted to actually go and buy or invest and build apartments. So that's what he's doing. He's actually building 80 units in Tennessee, all tax deferred using the deferred sales trust. So you're absolutely right. It's not just for baby boomers. It's really, what is your wealth plan? What is your transition from selling your big business or your big company? And how are you going to help to get there? And that's where the deferred sales trust can be that plan.
So just to kind of take a step back, I know you guys do a lot of tax stuff. Do you guys only do this? Say, for instance, I wanted to get my taxes because I invest in real estate, and having someone who also invests in real estate as a CPA, I'm not a CPA, but you guys, your businesses, would you advise someone who is looking just to get their taxes done with you? Do you guys do that? Do you guys offer that? Or is that something you guys don't at all do?
So I'm not a CPA, and I'm a commercial real estate broker
Right.
who's been trained on the deferred sales trust by a CPA and by
Right.
the tax attorneys who created it. So our niche focus is the deferred sales trust and being the trustee for that. So I'm kind
Okay.
of like the broker for this. I'm kind of like the an anesthesiologist. Want to make sure that you don't
Right.
die on the
The
table
nurse.
here. Yeah, the nurse, right? That idea, or kind of like the offensive coordinator, like I'm putting everybody together, right?
Love it.
So that's our role. So we do refer out to some of the best CPAs for real estate and taxes. We have those referral sources. And by the way, each trust has its own tax return that a professional does those tax returns. So yeah, that wouldn't be us. Our niche is just on this
Trust.
particular part of the deferred sales trust.
That's amazing. So where can more people find out more about you, Brett? Do you have a website? Is it best to contact you through social media? How is the best way to learn more about what you do and actually get in contact with you?
Yeah, so you can go to capitalgainstaxsolutions.com if you want to learn more. We also have the Capital Gains Tax Solutions podcast. And if you're a business professional looking to grow your business by offering this to your clients, we think it's hands down the best way to attract and add value to high net worth clients, whether you're a business broker, a financial advisor, a high-end luxury realtor, commercial real estate broker, or syndicator or operator. Once you get this, it's transformational for your business as well. And you can go to experttaxsecrets.com. That's experttaxsecrets.com. Make sure you put the T on the expert and the T on the tax. There's a double T in the middle. And that'll take you to our page there to learn more about that.
Awesome, Brett. Thank you so much. This was very enlightening. I love the analogy with Blockbuster and Netflix and how this can be revolutionary for a lot of people. And I think that if you are a high net individual, you owe it to yourself to check out experttaxsecrets.com and all the other ways that you can get in contact with Brett. So all those will be in the description. Definitely check those out. Make sure you definitely subscribe to Capital Gains Tax Solutions podcast so you guys can learn more about what Brett does and how he can solve any of your tax issues in real estate. And thank you so much, Brett. I appreciate all that you do, and I can't wait to learn more about this revolutionary tax benefit.
Thank you, Brandon. My pleasure.
Cheers, buddy. Have a good one. Bye-bye.
You too. Bye.